Let's have a 1 week chart of oil if we can. Just check how crude in North America has fared this week. As of today, it was up something like 1%. So not a massive move, but yeah, you can see up 1% in the past week. There was a spike, though, earlier amid fears, among other things, that the Americans might launch an attack on Iran after the killing of unknown numbers of protesters. Let's get more from Rob Thummel, Senior Portfolio Manager and Managing Director at Tortoise Capital. Thanks very much indeed for joining us. It's interesting that we have two geopolitical stories, Venezuela and Iran, on the boil.
No, you're right, Andrew. It's there are two, but yet there is probably zero geopolitical risk embedded in the crude oil price at the present time. So that, from our perspective, offers the potential for crude oil prices to rise just because of these added geopolitical concerns that seem to be rising, coming up every day.
That's interesting. So we've heard that for quite a while now, that the oil market seems remarkably calm about geopolitical risk. You don't even think that a bit of risk premium is edging into crude right now?
Maybe a mild amount, but not a lot. And if you think about what's going to happen, I mean, so it's all about geography, right? With Iran, and it's the Strait of Hormuz, right? And where Iran is geographically relative to the Strait. And as a lot of your viewers know, the Strait of Hormuz is very, very important. It's very critical in the transportation of energy products globally, right? But especially oil, because tens of millions of barrels a day go through that strait. And so if Iran would somehow, some way temporarily block that strait, that would cause really wreak havoc on the global oil market and reduce the supply, at least on a temporary basis. Now, obviously, there's a lot of interested parties, including the U.S. and China and others, that want to make sure that doesn't happen. But the reality is that the Strait of Hormuz is a really important point and a really important strait for the transportation of a lot of energy commodities around the world.
Yeah, I've heard it said this week that that would be a desperate move for the regime in Tehran, maybe one it would do if it really felt its back was to the wall.
Yeah, I think it is a last-ditch effort, but absolutely. But it would cause oil prices to rise substantially. So the more realistic view is, as you highlighted from the start, is will we add even more geopolitical risk to the oil price? And I think you could see the oil price rise a bit more, a few more dollars from here as these tensions continue to rise. Now, if somehow we were able to everything was able to calm, then we still, the fundamentals are still the same, and they frankly still are, even without geopolitical risk. Fundamentals in the oil markets are still the same. The global oil market is oversupplied, and so that's why the oil price came down last year. And so until we get an adjustment in supply or higher demand, then we're probably just going to be seeing an oil price move with perceived geopolitical risk.
Where do you see oil going in the next year, Rob? I know that's an impossible question virtually to answer with so many factors, so many variables and wild cards. But do you see crude edging up despite fears of a glut?
We do, Andrew. I think what we'll see, and maybe it's over the next year is actually probably a good time frame to talk about. We look at it at Tortoise from an energy perspective as kind of energy experts per se over a much longer period of time. But what I would say is, yes, oil prices probably inch up. I mean, because we do think that you'll see less oil production, especially in the U.S. And so that will reduce the oversupply. Actually, I think from a consumer perspective, we'll actually probably see better demand than what we expect because of the lower oil price, both domestically and globally. So that'll help as well as balance the global oil markets. But longer term, the kind of the Goldilocks price scenario for producers and consumers is probably in the 70s, the low 70s range. And we think we get there over the longer term. We're not probably going to get there this year, and we'll probably still be in the 60s. But over the long term, we think we could see the oil price move up, in the low 70s at some point in time.
Interesting deal. I see Mitsubishi, the giant Japanese trading company, spending more than $5 billion to buy into U.S. shale natural gas.
Well, that shows you what people think of natural gas, right? And I think Andrew, you and I have talked before. At Tortoise, we are big fans of natural gas, not just in the U.S. but Canada as well, because of what's happening with AI, right? And as you know, we think electricity is going to become the new oil. Natural gas and nuclear are going to be the primary fuel supply sources. One of the reasons why the U.S. can win this global AI race is because we have low-cost electricity in here, because we have low-cost natural gas from the U.S. and, fortunately, from Canada as well. And so so we think that natural gas is actually a great place to be. We think natural gas demand is going to rise and grow steadily for not just a few years, but for likely decades. And so we are big fans of the opportunities in natural gas, all the way from the producer to the pipeline companies that operate the pipelines that transport it, all the way to the electric users that are generating power primarily from natural gas.
Rob, we better leave it there. Thank you very much indeed for joining us.
Thanks for having me.
Rob Thummel, Senior Portfolio Manager and Managing Director at Tortoise Capital.